What if I told you I'm selling 12 stocks this month, despite the dip in markets? This is one of the biggest single-month portfolio reshuffles I've done in years. I'm reducing exposure to positions across the UK, across China, across defense tech, mining, and even ETFs. Mostly, I'll maintain the cash generated from this until we find better opportunities. But I'm looking at redirecting some of it into just 2 names. Because sometimes the best investing decisions aren't about spreading wide, they're about going in exactly the right place at the right time. Let's get into it. And first, I want to talk about the crypto space. I want to talk about something that has just hit an all-time low, and that is Arbitrum. It crashed to under 9 cents at the end of March. But here's what I think the market is missing. Arbitrum is still the dominant layer 2 scaling solution on Ethereum. The protocol isn't broken, the technology isn't broken, but what's broken is sentiment. And that's exactly when I want to get in. Yes, there is a token unlock coming in April the 16th, roughly 93 million ARB tokens entering circulation, and that will create some short-term noise and I expect volatility. But I'm not here for the next 2 weeks, I'm here for the next cycle. Arbitrum has the TVL, the developer ecosystem, and the infrastructure relationships to bounce hard when the market rotates back into layer 2s. So I think this really is an accumulation zone. My second buy is Codexis. This is a quiet one, but stay with me. Codexis is a biotech company with a real difference. They engineer enzymes using their proprietary Code Evolver platform. And those enzymes are becoming critical infrastructure for pharmaceutical manufacturing. Think of them as the picks and shovels play on the next wave of synthetic biology and drug development. The stock is currently trading between $1.50 and $1.70, well off its highs, and Craig-Hallum just reiterated its buy rating in March after strong full-year results. The business seems to be stabilizing, the technology moat is real, and at these prices, the risk-reward is really compelling. High conviction, long duration, I'm in. And so here's what I'm selling in April. Let me take you through them by category, because grouping them just tells a cleaner story than going through them one by one. 3 of my sales this month are just pure, unapologetic profit taking. Mercury Systems has had a staggering 135% run in just the last 12 months. The turnaround story has played out beautifully, and the backlog is at record highs approaching $1.5 billion. But a stock that's up 135% is probably now priced to perfection. So I think it makes sense to bank it. Intel is in the same boat. It rallied 84% in 2025 on the foundry turnaround narrative, and fair play to those who rode it. The Intel 18A process is in high volume manufacturing. The data center segment is growing again. But at $44, I think the easy money has now been made. So I'll reassess if we see a major new foundry customer land in the second half of this year. Next, I want to talk about ARKX, the ARK Defense and Space ETF. It has done 62% in the last 12 months, but the space theme is priced in and there's weakness in the charts. I'm also doing a significant cleanup of my UK listed positions this month. Reckitt Benckiser seems to be stuck below its 52-week high. Jefferies just cut their price target, and I don't see a near-term catalyst. And then there's Marston's. UK pubs are still fighting cost inflation and a cautious domestic consumer. Jupiter Fund Management is in the active fund management sector, and that sector is in slow structural decline as passive continues to win. In China, I'm trimming Ping An Insurance and reducing my position in EEM, the Emerging Markets ETF. Ping An is a quality business on paper, but China's property sector crisis continues to be a drag on sentiment. The regulatory environment for insurance is unpredictable, and the recovery that was promised has been slower than anyone expected. And at this point, I just don't want to keep waiting. EEM is heavily weighted towards China, and with global tariff uncertainty creating real headwinds for emerging market exporters, I'd rather not carry that exposure right now. I think there'll be a better entry point. I'm also selling both Sibanye-Stillwater and Fresnillo. These are 2 very different mining stories, but both have the same problem right now: near-term headwinds that I don't want to hold through. Sibanye is dealing with the long-term structural decline in palladium demand as the EV transition reduces catalytic converter use. Yes, they have gold and lithium projects coming online, but that thesis takes years to fully materialize, and the stock has been a grind. Frenilo has just cut its silver production guidance for 2026, calling it a transition year due to mine sequencing. JP Morgan has it overweight, and I understand the long-term silver bull case. But we're currently sitting in healthy profits, and I think it may have peaked, at least in the short to mid-term. Finally, 2 more ETF exits. VBK, the Vanguard Small Cap Growth ETF. Small caps have consistently underperformed in this higher for longer rate environment, and I don't see a clear catalyst for them to re-rate. And also XBI, the S&P Biotech ETF. Right now, I'd rather own a specific name like Codexis. So there it is, that's April's full picture. Lots of positions cut, 2 in. Accumulation in Arbitrum at historical lows, and a precision bet on Codexis in the enzyme engineering space. Follow me on eToro as EdWhite1 for live portfolio updates, and I'll see you in May.